When you're running your personal stuff through the business and your business stuff is your personal stuff, you are essentially not respecting the corporate veil of this LLC. The LLC is giving you liability protection. If someone sues you, they're suing the entity, not you personally. But when someone sues you and says, look, Your Honor, this person is not respecting the corporate veil. They're running all of their business stuff through their personal and all their personal stuff through their business. They're not respecting the corporate veil, right? So you become an easy target. So I know this is going to sound crazy, but one of the easiest ways that you can get asset protection is just separating business and personal, right? Give me 1 second. I'm going to restart my song here. I have like a little background music. Okay. Is this making sense so far? We want to separate what's business. We want to separate what's personal. Can I get a 1 in chat if that makes sense? So in other words, I go to Chick-fil-A outside of business hours. I'm going to run that through my personal stuff. If I'm taking out a client for dinner, I'm going to run that through my business bank account or my business credit card, whatever. It doesn't matter. Business credit card, business bank account, personal credit card. Okay. And we do that to respect the corporate veil, number 1. And number 2, when you prepare your returns and you give this to your CPA, your accountant, your enrolled agent, it's going to make their lives so much easier and it's going to save you money. Okay. Let's move on. So you took my advice, you separated business and personal. Now we're going to talk about transferring money over from my business bank account to my personal bank account to pay for my necessities. I eventually want to start taking money out of my business bank account so I can pay for my car, so I can pay for my mortgage, so I can pay for food. Obviously, we need to survive. We need to take money out of the business bank account. Here is a general misconception that a lot of people don't understand. People think, I don't want to take money out of my business bank account because if I take money out of my business bank account, I am going to be taxed on that distribution, right, Steven? So I'm going to keep the cash in my business bank account. I don't want to take cash out of my business bank account because I don't want to be taxed on that. Is that true or is that false? What do you guys think? Is that true or is that false? Sharp says it's false. Okay. Brad said it's false. Christina, it depends. Okay. It's a distribution. Here you go. An LLC. Okay. When you start an LLC, you're going to do this. Let's spend 2 minutes on this because you guys need to understand this for my business owners out there. Let's put this right here in the middle. When you have a real estate agency, LLC, car wash, it doesn't matter. Like plug in your industry into this LLC here. By default, when you are the 100% owner of this entity, you are going to be taxed as a sole prop, regardless, which reports their taxes on what schedule? Schedule C. Now, there's other ways that an LLC can be taxed. We're going to talk about that. It can be taxed as an S corporation. Let's say you go into business with your friend, with your brother, with your colleague. It can be taxed as a what? Partnership. And the fourth way it can be taxed, actually, which is very interesting, an LLC can be taxed as a C corp. We're going to disregard the C corp because C corps are ucky. And we're going to work with these 3. These 3 type of tax elections are known as pass-through entities. What does pass-through entity mean? It means that a sole prop, an S corp, and a partnership don't pay taxes. Instead, they pass the earnings, they pass that liability down to the shareholder through, there you go, through a K1 or through a Schedule C if you're a sole prop. That's what that means. So to answer my question, when you take money out of your business bank account over here to your personal bank account, that is known as an owner's draw. or a distribution. Either way, we use those the same way. It's an owner's draw from our business bank account to our personal bank account, okay? There is no tax issue with taking money out of your business bank account to your personal bank account. That's why I'm a big adamant about take your freaking cash out of your business bank account, put it in your personal if you don't need it, okay? You just become a target, and business bank account yields suck. They give you like 0.1% yield. Just put that into your personal